Hyperliquid is deepening its engagement with U.S. policymakers as regulatory scrutiny intensifies. On May 15, Jeff Yan, co-founder and CEO of Hyperliquid, disclosed that he and the Hyperliquid Policy Center met with Washington policymakers as the CL Act moves through Congress. This comes amid reports that CME Group and Intercontinental Exchange ICE have urged U.S. regulators to scrutinize Hyperliquid's decentralized perpetual futures platform. Yan stated that the discussions centered on the protocol's benefits to American consumers and the regulatory path to bring on-chain derivatives into the U.S. market. Meanwhile, the protocol's policy center responded to a Bloomberg report that CME and ICE raised concerns about market manipulation and sanctions risk on Hyperliquid. They called the concerns unfounded and highlighted that Hyperliquid offers enhanced market transparency by publishing a complete on-chain record of activity. The stakes are high because Wall Street is pushing for Hyperliquid to register with the Commodity Futures Trading Commission, CFTC, which would require the platform to implement customer identity verification and trade surveillance systems. This move could reshape how decentralized derivatives platforms operate in the U.S., forcing them to comply with centralized regulatory frameworks. Hyperliquid's architecture is designed to resist such oversight, operating on a network of 31 validators. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. And securing user deposits through a 3 of 4 multisig bridge. This setup gives regulators a potential jurisdictional hook if they decide to act. Despite its IP restrictions, American users still trade on the platform, which means the CFTC could argue that Hyperliquid touches U.S. markets regardless of geographic blocks. The platform has processed over $178 billion in perpetual futures volume in the past 30 days, according to Defilama, and has now reached over $181 billion in total volume. The growing influence of Hyperliquid in the derivatives space is a signal that regulators cannot ignore. The platform's ability to function without traditional compliance. Infrastructure has drawn attention from both policymakers and Wall Street institutions. CME and ICE, which own major U.S. exchanges, are advocating for CFTC oversight, which could force Hyperliquid to adopt surveillance systems and identity checks. This could set a precedent for how decentralized platforms are treated under U.S. financial law. The outcome of these discussions will determine whether Hyperliquid can maintain its current operational model or must conform to centralized regulatory standards. The next signal to watch is whether the CFTC will issue formal guidance or enforcement actions in response to the pressure from Wall Street and the lobbying efforts of Hyperliquid's team. The platform's on-chain transparency is a key point in the debate, as it contrasts with the opaque systems of traditional exchanges. Hyperliquid's decentralized model allows for real-time, verifiable transaction records, which could be a double-edged sword if regulators decide to leverage that transparency for enforcement. Meanwhile, the platform's reliance on a multi-sig bridge and validator network introduces a unique regulatory challenge: how to enforce compliance without disrupting the decentralized nature of the system. As the CL Act progresses, it may provide a legislative framework that could either support or hinder Hyperliquid's position. The pressure from Wall Street institutions like CME. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. And ICE suggests a broader push to bring decentralized markets under centralized oversight, which could have wide-reaching implications for the crypto derivatives space. If Hyperliquid is forced to comply with CFTC requirements, it may set a precedent for other decentralized platforms, potentially reshaping the entire landscape of on-chain derivatives. The next key development will likely come from the CFTC itself, as it weighs the arguments from both sides and decides how to proceed with enforcement or guidance. For now, Hyperliquid continues to operate at scale, with a growing user base and significant trading volume, signaling its importance in the evolving financial ecosystem.